You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that funky tune means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Yup, it is time for TWIFO This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this right now. Unfortunately, it's the final program of our broadcast week here this week. No markets open here in the U.S. tomorrow to observe the 4th of July holiday. Don't blame us, though. Not our fault. We didn't shut it all down. We'll make sure we have some fun best ofs and other fun stuff to sink your teeth into while you're missing vol views. Because I know you folks out there, we miss it. We can't force the folks to come in on the day off and do the show. You know, it's just let them have a day off too. Let your hosts have a day off too. They need it out there. Of course, we need you guys to come in, keep listening to the programs. We'd love to see so many of you have discovered not just TWIFO, but the entire network over these days. Options Bootcamp, Playbook, Option Block. I'm blanking all the shows we do right now, but so many of you love to see all the new earlobes coming in. Keep that flow coming. If you like what you hear, make sure you leave a review in your platform of choice so other folks can continue to discover this and all the other programs that we do here. We do love to see the new people, and we do love to hear from you guys, too. So keep those questions coming. Just don't ask the questions in, like, your iTunes review, because we don't get to those in a timely fashion, shall we say. So if you have a question, you know where to find us for a much more immediate feedback. And, of course, however you listen live after the fact, make sure you keep those questions coming. And also, you head on over to cmegroup.com/TWIFO to generate your own reports. It's a cool little added wrinkle we do just for this show. So if you want to check out your own reports to see how that lines up with what we're talking about here on the show, maybe it's a product we didn't get a chance to touch on. Maybe it's an esoteric product that we don't really touch on this show. You want to check it out for yourself, cmegroup.com/TWIFO. Those reports are running all day, 24/7. Get in there, kick the tires, and light the fires till your heart is content. This is normally the portion of the show where I toss it over to my friend and compatriot, Mr. Sean Smith in the FTSE Russell hot seat, but unfortunately he had some family issues he had to go attend to today. So we have an able guest filling in, doing a rare bit of double duty. Not only is he holding down the FTSE Russell hot seat, also the CME Group hot seat. He's sitting in two seats at once. Can he handle it? We'll find out. He is the once and future Dr. Vix, Mr. Russell Rhoads, a.k.a. the Director of Research over there at EQ Derivatives. Mr. Rhoads, welcome back. How are your butt cheeks straddling those two seats, sir? Is it comfortable?
Oh, my goodness. I feel like I'm juggling knives here with a lot of pressure on me. And if you hear any loud noises in the background, don't fret. The Rhoads household is getting 3 new bathrooms installed at once. So
3 new bathrooms?
I know, man.
You're going to have like a 6-bathroom house?
Well, we're replacing 3 bathrooms. Updating 3 bathrooms. So, three of the 7 bathrooms we have in the house we're actually having redone.
That's a lot of bathrooms. But, these days, everyone's stuck at home. Everyone's stuck together. Having nice bathrooms, probably not the worst thing. So there you go. He's probably happy to be away from all that madness as well. As we head on into the movers and shakers, this, of course, you can find this for yourselves if you head over to that TWIFO link over there, listeners. Mr. Rhoads, this is where I usually ask my compatriots here, where should we begin our journey to the dark side or to the light side this week, sir?
Equities. Totally equities.
Well, not just equities. First, upside movers or downside movers? Where should we go?
Upside movers or downside? Well, let's do downside movers because it's been such a good week for most things.
Yeah.
It'll be short and sweet.
Yeah, that's right. If you look at the chart for yourselves, listeners, not a heck of a lot of red on the screen, which means it's another one of those biased weeks, shall we say, where everything's usually trending in one direction, whether it's up or down. This week, it's pretty much all up. So dark side, not a lot until you get to the top. Number 5 on the dark side is the Nikkei, off about 0.5%. Number 4, KC Wheat, also off about 0.5%, a little more than that. Then Oats, our old friend Oats has been popping around a little bit of late, off 1.81% over this past week, since our last show, of course. Not since Monday. This is since our last show, listeners. Lean Hogs off 4.14%. The number 1 dark side mover this week is iron ore, yet again moving off almost 7.5% now. There's going to be a little bit of an addendum I'm going to add to this dark side in a little bit when we get to the listener mail. So keep that in your back pocket for now, listeners. One more product is going to slot in there in a little bit, but it's not in our core movers and shakers scan, so we didn't include it in this. But maybe going forward we will. Some listeners seem to have that on the brain. Now let's move to the light side. You got to go all the way down to number 18 to find the Russell 2000, a rare quiet day. It also shows what a upside biased week it is because it's up nearly 2%. That's not enough to even break it into the top 5. Last week, Russell 2000 was number 10 at off 2.07%. So how the worm has turned in a week. Of course, coming off the heels of the big recon. We'll get to that in a second. The actual top 5 here to the upside. Number 5, heating oil up 4.66%. Last week, it was off 4.01%. So interesting swing here for heating oil. Number 4, Eurodollars, up about 5.25%. Number 3, corn. We talked about corn on the show last week. A rare delve into the ags, up 8.11% this week. Last week it was off 5.14%. So big swing in corn over the past week as well. Number 2, our old friend dairy keeps persisting in the top 5 to the upside and to the downside every week. This week is to the upside, up 10.18% for number 2. Number 1 with a bullet this week is Nat Gas. Another crazy swing for Nat Gas as well. It's up 11.13% this week. Last week, it was number 1 to the dark side, off 11.52%. So big swings in Nat Gas and corn. A lot of products out there having big movements. But now, Mr. Rhoads, I believe you expressed an interest in equities starting off the show. Is that still your choice, sir?
Yes, it is, and I was just trying to throw a curveball because every other time I've been on the show, I've always said fixed income.
Yeah, I already had Eurodollars pulled up. That's how much you surprised me.
That's how I was trying to mess with you.
All right, where should we? I'll let you start because before I start parsing some of the numbers, it's been a crazy week, Mr. Rhoads. What's your take on what we're seeing out there in the equity space right now?
It's just a whole lot of hope, and everybody thinks that America's going to be great in the next 4 years, but I think they're starting to realize that we're going to get a bit of a change, and I think it's going to be positive for the whole world. I really do think that's what a lot of this is about, not necessarily the business conditions.
Well, there's hope for something out there, that's for sure, because we are, once again, whistling past the graveyard out there. Coming into today's show, markets are once again, on the equity side at least, full on in rally mode. the bull is out of the pen and he's on the rampage here. Most of that driven by some strong jobs numbers. The U.S. adding about 4.8, almost 5 million jobs in June. That compared expectations for 3.7 million. Unemployment rate falling with second straight month. That's enough to send us off into the stratosphere again. As I said on the option blog not too long ago, in spite of the fact that these coronavirus concerns are lingering, we're seeing Apple and McDonald's and others extending their shutdowns and their delays in reopening as a result of this. Of course, lingering tensions in Asia as well. So a lot to unpack there. But the market seems to be firmly focused on, as the dual-seater said, Mr. Dr. Vix, the hope, because there's certainly a lot of hope in the air out there. Coming into the show here, we've got VIX at about 26.5. That puts it down about 7.5, 7.75 handles from where it was last week. So obviously, this protracted rally has squeezed a lot of the juice out of the vol space. This time last week, we were talking about a little bit of an uptick, a little bit of backwardation in that VIX futures curve. This week, not so much. The RVX, which is, of course, the VIX of the Russell 2000, at about a 36.25 coming into the start of the show. That puts it down about 9 handles from last show, so a lot of juice getting squeezed out of that small cap balloon there. And our old friend VVIX, aka the vol of vol, was at about a little bit shy of the 120 handle. That puts it down about 15 points from where it was this time last week. That means that spread, that VIX RVX spread, is at about a little bit shy of 10, about 9.75. That puts it in about 1.25 from where it was last show. Mr. RHOADS, I know you like to watch the variations and fluctuations of volatility between large caps and small caps. That spread got crazy wide not too long ago. It was out to about 14 points and now has come in a wee bit. Anything catching your eye out there in the interplay between small cap vol and large cap vol over the past week or two, sir?
I was doing a review of what had happened in the first half, and I was amazed at the performance difference between the Russell 2000 and the S&P 500. I didn't realize how wide that gap actually was, and apparently the two volatility indexes were definitely reflecting that. I have a funny feeling that we're going to see some rut catch-up over the second half of this year. And one of the ways to figure out if we're getting confirmation of that or not is what you just mentioned in that spread between RVX and VIX. It's still awfully wide, but the direction looks like maybe the second half, small caps may own the second half.
Well, I think you're certainly making the FTSE Russell hot seat happy there. Small caps may own the second half of the year. There's been certainly a topsy-turvy first half of the year, that's for sure. All of that culminating, listeners, in the big event we saw last Friday. That was, of course, the big recon. Sean's been all a tizzy about that. It's pretty much the biggest day in the FTSE Russell calendar year. That's, of course, when the entire Russell 3000 is recalculated, rejiggered. Names come out. Names are put back in. CME actually crunching some of the numbers out here for what they saw from an overall impact of the Russell recon this year. As Sean mentioned last week, about $9 trillion worth of assets benchmarked to it. It's from the CME analysis. They said the market shrank slightly from a year ago. Total market cap of the Russell 3000 is now down from $31.7 trillion to $31.4. So slightly down, but still around the same ballpark as last year. First time ever, there are multiple companies exceeding $1 trillion in the Russell 3000 out there. So that would be the Microsoft, Apple, and Amazon. So big tech, as I said before, has been dominating this rally, and now they're taking their big chunk here of the Russell, reconstituted Russell 3000. Total combined market cap of the top 10 companies up 23.3%. That gets back to that long-standing debate people have had in the equity space for a while. This whole rally seems to be pretty much on the backs of the FANG M stocks. You take them out, it's a different story, and that kind of just reflects that there. 23.3% in the increase of the top 10 companies since last year's recon. The smallest company in the Russell 2000 is Limestone Bank Corp. That now stands at $94.8 million in market cap. That's the first time in over a decade that we've seen the smallest stock in the Russell 2000 be below the 100 million market cap level. Also on the volume front, they've seen notable upticks in ADV for the E-mini Russell 2000 futures. ADV's up 53% so far this year versus the first 6 months of last year. That means that ADV in June alone was 277,000 contracts. That's a big jump. Average daily open interest in June also up over 575,000 contracts. That's the highest it's been in years out there. So people clearly playing in small caps, people clearly playing in equities as well. Mr. Rhodes, obviously, equities realm has been kind of a bit of a weird one of late, very topsy-turvy, mostly Topsy of late, not so much on the Turvy. What are your thoughts here on what's going on with Russell 2000, the impact of RECON, and everything else we're seeing out here this week, sir?
Well, it's the lack of impact of RECON because it's such a smooth process, and they flip about $1 trillion worth of stocks around at the blink of an eye on the close last Friday. It's just amazing to me how much you really can't tell unless you're paying attention that something just went on. In fact, the volatility, RBX typically is depressed around the RECON process as opposed to being elevated. It's elevated this year, but I think that elevation is a little bit more, well, I know it's a little bit more about how the small cap sector has underperformed. The number that blows me away is that the top 10 companies, they're up 23.3% since last year's RECON. And, of course, we can attribute that to some really big tech names that show up in the NASDAQ 100, the Microsoft, Apple, and Amazon. So just if the Russell 2000, this is something that I've been trying, and the futures and the futures options are a great way to play this, but it's something that I've been really keeping an eye on and trying to figure out the best way to take advantage of is the catch up that I think the Russell 2000 is going to do against the S&P 500. And you can almost do funny spreads where you do a bullish option spread with Russell 2000 options on futures and do something bearish with the S&P 500. If everything goes up, lose a little bit less on the bearish one than you make on the bullish one, and vice versa. So I do think that there's a rare opportunity right now to get involved in those markets.
I like it. A rare opportunity indeed. It's pretty much, you could say that almost every week about just about most of the markets we're talking about. Rare, unprecedented, somewhat bizarre, all those adjectives apply. But since you're on, Mr. Rhodes, since you're doing double duty in both hot seats, I know where you want to go next. I won't even bother asking you. I've already pulled it up, as I said earlier, because you're always giving me a hard time. Not enough fixed income here on the show. Well, Eurodollars was lighting it up this week, up 5.25% about since our last show. So let's dive into there. That, of course, is the volume behemoth over there at CME. As of start of the show, 3.2 million contracts have hit the tape so far this week. Interestingly enough, Eurodollars moving a lot since our last show. Not a lot net on this week since Monday. It's almost unched, which is kind of weird. So it kind of had most of that move, it seems like, last week, right after our show, which is kind of interesting. Coming into showtime, we're seeing that front future 99.725. Easy for me to say out there. And where is the most action? I mean, this is an active contract across the board. We actually have to go all the way out to September to get the, looks like the true action out here. And that is, in that contract, we have about 21.8%. So that just kind of goes to show how spread out the volume is. In pretty much each of these contracts, they have a decent amount of volume. But almost 22% of the paper coming up in that SEP contract here. And the big print out there, the 99 3/4 calls, 260,000. That's more than the paper, and we talk about in a lot of these complexes in the top 10 put together, listeners, in their total volume. And that's just in one call strike. That's the 99 3/4 calls. 260,000 of those bad boys going up this week. If you're wondering, the big print was Tuesday, 173,000. Monday, 82,000. Today, or I should say yesterday, only 950, and today, 3,500. So seems like maybe some verticals going up, 99 and 7/8 up there as well. Maybe a little bit of a vertical Tuesday, because that strike was also very active on Tuesday. But not a lot of paper today or Wednesday, but a ton on Monday and Tuesday. So interesting. Earlier in the week, a lot of action here in the Eurodollars calls. Let's see what else is dominating our tape out here really quickly. Any other massive prints, anything close to that size out here. We go out, actually now it's the 99 7/8 calls right behind it, 189,000. It makes me think there was some linkage there on Tuesday with some of that flow. Pretty tight vertical, but in Eurodollars, things are a little bit different than you see in your let's say, traditional equity option vertical out here. Let's look at the vol out here coming into showtime. The vol was off a fair amount, about 2 points, about 2.2 points in this SEP contract, so right around 29 and a quarter out there. So fairly volatile compared to some of the other assets we're talking about out here. In terms of SKEW, let's see what happened out here, listeners. Last week, the puts were pretty cheap, 17.4% cheap to the at-the-money. This week, a pretty big increase. They were only 11% cheap. So the puts getting a little bit firmer this week. The calls last week, 29.2% rich. So clearly all the juice was in the calls last week. This week, 34.8. So calls getting bid, puts getting bid, vol coming in. Kind of an interesting development out here in the SEP Eurodollars. Mr. Rhodes, you're always on us. More fixed income, more fixed income. What are your thoughts here on what's playing out in the Eurodollars? And are there any other fixed income categories lighting up your tape this week, sir?
There aren't really any other categories lighting up the tape, and I'm amazed at the size of the trades because I'm a big disciple of the CME Group's FedWatch tool, which anybody that's listening, don't even bother going to look at it right now because basically every Fed meeting that they've got on the calendar right now, basically the market is pricing in with 100% certainty that we're going to be on a target rate of 0 to 25 basis points. And that goes out to March of next year, which you would think that the type of volume that you're talking about would accompany maybe some changes in attitude as far as what people are expecting interest rate wise. But that's not the case here. And the case may actually just be some banks trying to hedge in their exposure to interest rates right now to make sure they continue to get some sort of positive return because they're going to have to continue to pay somewhat of a positive return to their depositors, their savings depositors and people like that. So I think it's a big use, but it's maybe a slightly different use of the Eurodollar options than we're used to seeing. Typically those big trades, you'd be running through the trades and I'd be running through the FedWatch tool, and I could see that maybe people's attitudes around what was going to happen in September have changed. No change since the last time I looked at the FedWatch tool.
Yeah, that FedWatch of late has kind of been quiet, which again reflects what we've heard from the Fed chairman himself not too long ago, that they expect to be on this course for the foreseeable future out here. Let's mix things up yet again. We started off in fixed income. Let's head on out now to energy yet again. Let's not go to WTI just yet, even though crude having, I think, its best quarter in 30-odd years over this past. I don't think that's even taking into account the swing from negative. If you take that just blows the doors off. But it's been a crazy town, but it's been crazy town in nat gas as well. Like I mentioned last week, nat gas was 11.5% to the dark side, our number one dark side mover. This week, nat gas, our number one upside mover at 11.13% to the upside. So a lot rocking in nat gas. Part of these percentage moves, listeners, is because nat gas itself, that future, has gotten pretty anemic. Coming into showtime, it's at 1.72. That gets back into the old discussion, trading options on super cheap names like this. But clearly, there's paper still lighting it up out here to the tune of, let's see, coming into showtime, 382,000 contracts on the tape this week. So pretty much the equivalent of one Eurodollar call strike. But still, a lot of paper nonetheless to parse. The big action out here coming again in the SEP contract. But actually, no, I take that back. It's that front contract that's taking up the lion's share of the oxygen. That's the AUG contract. Has about 26 days to go, listeners. That did nearly half of the paper, 48.1%. The vol, as you might imagine, out here is up, but not as much as you might think, given the fact that this thing is swinging like a roller coaster week in, week out. It's only up 1.4 points. That's still, though, it's already very frothy. It's at a 65, almost a 66. So you're talking more than double what we saw in the Eurodollars. This is getting to like a Bitcoin level of volatility out here. So, and again, it's merited. Nat gas is moving and shaking, as we broke down earlier. Let's see the big change out here. Let's go to the SKEWs. The puts last week, 1.4% rich to the at-the-money. Again, this is in that front AUG contract, listeners. This week, nearly 7% rich. So puts getting a pretty strong bid. Calls, 2.2% cheap. Last week, this week, about almost 5.5% cheap. So calls coming in, puts getting bid, which is kind of interesting. Maybe they're fading this recent resurgence out here. Let's see what the big prints are out here And looks like it's pretty much the even money strikes you'd expect. We're at 1.72, and it's the 1/2 puts in this front contract that are dominating the tape, doing 41,000 contracts. The big day was yesterday, 21,000. It's pretty much half of that going up yesterday. About 4,100 today, 9,000 and change on Tuesday, 6,200 on Monday. So big day yesterday for these 1/2 puts out here in nat gas. Maybe some folks drawing a line in the sand. Either way, a lot of opening paper out there as well. So. But also a lot of back and forth, it seems like, on this strike, because nowhere near all of that 41,000 is opening. Let's see there. Then we drop off quite a bit here to number 2. We go out to the 1/2 puts in September, it looks like, as well. Those also doing pretty active paper, about 15,000 contracts. And then we go back to the 2 calls here in August, doing about 12,000 contracts, slightly opening. So a lot of back and forth on all these strikes lists. There's not a lot of bias, really, in one direction or the other, not closing, not opening. It's just kind of back and forth, churn and burn, which is kind of to be expected here in a very volatile asset like this. Mr. Rhodes, you don't get a chance to talk nat gas a lot. It has been swinging quite a bit, even though it is a very cheap underlying. Is this one that comes across your research radar at all? And if so, what are your thoughts, sir?
Oh, absolutely. It's and it comes across my research radar because of the amount of volatility that you see out of the underlying and what gets priced in by the options as well. Is this the one they call the Widowmaker?
I could certainly see that applying, sir.
I think back in the day, I traded nat gas futures for a short period of time, and one of my buddies said, "I cannot believe you're even touching the Widowmaker." But anything that is referred to as a Widowmaker in the financial markets that has options is probably something that's going to be attracting all of the option traders. And nat gas, I think, just kind of, nobody was really paying attention to anything that industry would be using just because of the slowdown in the overall economy. But we need nat gas to keep our homes cool. With all the workmen coming in and out of the Rhodes Manor right now, we are sucking up the natural gas to keep our air conditioning going, I'm sure, in one way or another.
Let's touch really quickly, since we're talking about energy. We got to hit on WTI. Like I mentioned, we're coming hot on the heels of the best quarter in decades for Brent. Certainly, Brent up 80% in the second quarter here. WTI 91% over Q2. I don't think that's taking into account the quick negative dalliance there. That's the best since the third quarter of 1990 when it soared 131%. Wow. So crazy times back in 1990 as well. So we got to touch on a little bit of WTI. We know you guys are out there trading it up as well. Up to you guys whether you want to hit select all. I like to do that. Lets me see all of the different months. So I could parse it all for you guys live here on the show, but it's a lot of data, particularly in a name like Eurodollars. So buyer beware. Tread lightly out there. Of course, cmegroup.com/TWIFO, the place to go to find all these reports. And if you pulled up WTI out here, you'd see the AUG contract is where the action is this week. 35, almost 36% of the paper coming into Showtime. We're at about a 40.5. So WTI back above that 40 handle, up about 5.25% just this week. So a good week here for WTI. The vol coming in pretty hard. It's down about 5.5 handles this week. So 17.75 or so. So the vol has come off markedly. Now, this is a point you've made before, Mr. Rhodes. I know you like to hang your hat in a lot of equity vol, but crude oil vol is more interesting than some people might think, and crude is much more of a vol-oriented product than most people would think. Do you concur, Mr. Rhodes?
I totally concur. And beyond concurring just on that, I really do think that, and I've yet to quantify this, it's on my long list of things to do, but I truly do believe that you can get an idea of what the next move is going to be out of crude oil by paying attention to the SKEW. Or if we're in a strong trend one direction or another, if you start to, if we're dropping fast and it slows down for a couple of days, and at the same time you're seeing a contraction of the implied volatility of maybe the slightly out of the money puts, that often is a good signal for a turn in the price of oil.
We've been waiting for a while to see that emerge in the SKEW, the call of emerge in the SKEW. Let's see if we can see it out here this week. Let's go out to that AUG contract listings, because that's where the action is. Like I mentioned, the vol coming in quite a bit out here, so it's getting pretty light. 17, almost 18 vol is pretty light, given how much this product has moved of late. Let's look at the SKEW. Let's see, last week the puts were 5.1% rich. This week, getting a little bit heavier, 12% rich at the money. So puts getting bid up here this week. Calls last week, 3.2% cheap. This week, 9.9% cheap. So calls coming in, puts getting bid. That's not exactly a screaming endorsement for this recent rally north of the 40 handle here. This does seem to be the case. Whenever we get these little patches of enthusiasm in WTI, people like to line up to fade it pretty hard. Let's see if the paper we're seeing out here is commensurate with these SKEW shifts. The most action for the month was in the AUG contract, but you actually have to go out to SEP to see the biggest print. That was the SEP 30 puts going up 8,054 times, pretty much active throughout the entire week. The biggest day was Tuesday, about 3,200 out there. A lot of this closing, so someone's taking the party off the 30 put strike here in September, I guess, deciding that the game is no longer afoot out here. Actually, I take that back. That 8,000 lot is a lot, but actually the biggest print out here this week is in Dees. It's 9,437 of the Dees 50 calls, and the most of that is coming today, 4,200 today. So someone's piling into the Dees 50s today. So I know what I said about that front month SKEW, but let's look at Dees SKEW just for a bit of comparison to see. Usually SKEW a little bit farther out, a little bit saner heads are prevailing. Let's see how that compares. Last week, the SKEW to the puts in Dees was 5.2% rich. This week, 6.8%. So the puts getting bid up here in Dees as well. The calls were 1% cheap. This week, 5.1%. So the calls getting faded, the puts getting bid up in Dees as well. Mr. Rhodes, does that lead you to feel that maybe folks are once again fading this rally in WTI, sir?
Yeah, absolutely. I think that it's kind of following the pattern that I was just talking about. We hadn't quite seen it yet. I don't think that you've started to see the option activity that would indicate a top. And I think a lot of people would be somewhat surprised by that because the move that we got off of negative oil prices, which was, I think, the last time I was on here, has been anything short of dramatic, even with the world economy not exactly growing like gangbusters.
Yeah, there's these little pockets of optimism, pockets for the economy coming back. Maybe that will cause a little bit of an uptick in crude demand around the globe, hence WTI rallying, Brent rallying, and then we look at what the market is trading in here, and you can't call them the savvy because they haven't been on every right tip of late, but still a lot of money is coming in to fade this recent rally. So maybe 40-odd is where we're going to top out for the near future out here. Listen, again, SKEW is not always 100%, but it's usually a pretty good indicator because that's where real money is coming to play out here. Mr. Rhodes touched on a lot of different categories, but there's more we can sink our teeth into. You're our guest. You're holding down both hot seats. I'll let you choose where we go next, sir. Throw your darts, and let's see where it lands.
What's up with gold?
Gold. We haven't done gold.
Metals. Let's go to metals for just a second.
We haven't done gold in a while, partly because gold hasn't really been breaking into our top 5 movers and shakers in either direction for a while. But because you asked so nicely, we can do it. And you know what? It is a good week to do it because gold did dance past that 1,800 level. Let's see if it can maintain it coming in. Nope, it did not. We lost it again ever so briefly, flirting above the 1,800 level, listeners. Now coming into showtime, gold front future at a 1789. So still the gold bugs can't be sad with that out here. Nice run up here. On the week, only up about 0.5%, but it has seen a nice run. We were just, doesn't seem like that long ago on the show, we were talking about can gold make it past 1,600? Can it sustain past there? Well, spoiler alert, it can, and it has done quite so much. Now the next level, obviously, is 1,800. Can it make it past there and sustain it? So far, the answer is no, but again, the warm turning may be out here in gold land. Let's see. Well, before I start parsing the numbers, Mr. Rhodes, obviously it's a big week for gold traders, hitting that 1,800 level, a very important psychological level. What are your thoughts on the metals out here these days, sir?
No, just looking at the gold options SKEW, looking at the August options, it looks like that 18 is a freaking wall, man. And if anything, people have been buying a little bit of downside. So we'll see if that holds up. But it was. I knew that it had creeped above 1,800, and that's actually why I did throw it out there, because it was a little bit more interesting than it usually is when I periodically fill in for my buddy Sean. But when you start to look at like the 1805s and the 1810s, the 1810 calls Yeah, the implied volatility is where is that number? I lost the number, but it was dipping down pretty quickly as you started to get past that 1800 number.
Yeah, gold vol has always kind of been a bit of a mixed bag. It was pretty anemic to dead for the better part of a year and change until all this madness started popping off at the beginning of the year. Then we saw a little bit more life sparking into gold vol. This week, not so much. This protracted rally squeezing a lot of the juice out of the vol balloon. Coming in right now, we're threatening that 1790 strike. We're seeing that front contract, listeners, the vol out there is at a 1466. That's off about 3.5 points. You get a little bit farther out, you go out 2 weeks, so at a 15.5. That's also off nearly 3 points. So the vol, what quick life there was in gold vol coming back in. It's been a hard one to really sink your teeth into. I mean, if you're buying gold, the underlying is moving enough, and it has been cheap enough. Maybe not last week or so, not so much, but you did get a good move out of it. But I remember when Nick used to be on the show a lot, he used to argue that, even though gold vol was cheap, the underlying was moving enough to really sustain it. And it was certainly hard to argue for selling it. And these levels were still kind of in that weird air out here. Let's see where the paper was this week. Looks like about a little more than a third was coming in that AUG contract that looks like about 25, 26 days to go. 37, almost 38% of the paper coming out here in the AUG contract. That's where the vol is, about 15 2/3, off about 2.14 this week. SKEW-wise, the puts last week were flat. They were 0.0. They were exactly even with the at-the-money. What does that mean, listeners? That means that 25 delta put was at the same vol level as the at-the-money, which is very strange. Not something you see very often out here. This week, it's fading a little bit. It's about 2.5% cheap, but still, that's pretty close to that at-the-money level. The calls, similar deal out here. The calls were 3.1% rich last week. This week is 3.7%. So it's kind of a flat skew curve, all things considered. Not a huge amount of differential between that 25 delta put and that 25 delta call, which is kind of what makes the commodities fun as opposed to your traditional equity where they all kind of hang out with that bid to the puts and that discount to the calls. Things tend to ebb and flow in the commodities, and particularly in gold. Gold's a good example of a volatile skew out here. Let's see where the action is. It was the 1875 calls leading the dance out here this week in August with about almost 7,000, 6,700 to be precise out here of these calls lighting it up. The big day is today, actually, 3,300 today and about 3,000 yesterday. Not so much going up in the beginning of the week. So obviously that yesterday's paper, we have the OI change on that, and all of that was closing. So it looks like maybe someone getting the heck out of Dodge here on these 1875 calls, but more of them trading today. So maybe someone else piling back in, or maybe deciding this is a little bit of a bridge too far. These don't have that long to go, like we mentioned but they still have about 26 days. So 1875, given what we've seen of late, that isn't that outlandish, but someone getting the heck out of Dodge on those calls here this week. Let's see what else was lighting up our tapes out here. Also pretty active, the 1800 calls. That's what you'd expect. That's at about 6,600, so pretty close. The big prints out there was actually today again as well, 1,795. 1,750 yesterday, 1,650 on Monday, and about 1,385 on Tuesday. Then let's see, we drop off a bit again to the 19 quarter calls, just a little bit shy of 5,000 going up. The lion's share also today. Today, pretty active day for gold options out here, 2,122 going up on these 19 quarters. But most of these upside calls, they've all been biased to closing. So some folks maybe putting them on, getting the profits they needed, getting them the heck out of Dodge, or deciding it's a little bit of a bridge too far. Either way, a lot of closing upside call paper this week in gold, which again isn't surprising. You had a nice little pop. Some folks probably taking some profits off the table. Let's just look really quickly. Whenever we're talking the shiny stuff, I like to go out a little bit farther, see if there's any weird prints. Got some weird ones. March of next year, 21 quarter calls. So if 1875 wasn't quite optimistic enough for your blood, 21 quarter calls. Someone's been active in that one pretty much all week to a tune of a total of 2,750. 750 on Monday, 150 on Tuesday, 1,650 yesterday, and a 200 more today. All of that opening. So someone's piling in opening for size in the March 21 quarter calls out here in gold. That's interesting. No other legs to it, no verticals. A lot of times when we see these weird strikes, we see a ratio, vertical, something else going on. Nothing. Straight up upside buying? Are they harvesting? That's one I want to dig into a little bit more and see if I can sink my teeth into that. Mr. Rhodes, what are your thoughts on these? Not as crazy as they were a month or so ago, but still pretty far out of the money calls, and anything else that's kind of lighting up your tape in the shiny stuff these days, sir?
Well, I think that you were pointing out the over 1,800 strikes and how it looks like people are getting out of Dodge. I wonder if the failed breakout is part of the motivation there. That that you're playing a breakout above 1,800 and think that maybe we're going to see a run to 2,000 or whatever. I'm just making up a target there. And like any good trader, you are basing your speculative trade on what's going on in the underlying. And if you get if we go above 1,800 and it just doesn't hold, and that resumes being some sort of psychological resistance. If you've made some money off the options, or if you haven't lost too much, maybe it's time to move on and wait until the summertime blahs are out of the way and then come back and try to play gold again.
Time for us to move on with the show as well into another product category. We haven't had a chance to do a lot of ags on the show, but last week we had a bit of a deep dive into corn. Corn is moving again this week. Should we hang our hats there or go somewhere else in the ags, Mr. Rhodes?
Oh, let's go to corn. Thank God for ethanol.
Is this a hot area of research for you these days, the ag option, sir?
I haven't been doing a lot in that. Pretty much everything I've been focusing on is either financials or ESG, and I don't think ags fall under either of those.
No, we don't get a lot of ESG love in the corn options out here, but corn is getting the love. As I mentioned earlier in the show, listeners, it's up 8.11%. Last week it was off 5.14%, so it was a top mover to the dark side last week, top mover to the light side this week. So big movement 2 weeks in a row for corn. Who'd have thunk it? Ags fighting their way back into the movers and shakers here this week. Coming into showtime, corn's at a 343 even. Let's see, and the most of the action out here was once again in that AUG contract that has about 22 days to go, nearly 30%, about 28% of the paper going up in that AUG contract. So that's where we're going to hang our hat out here this week. All this movement translating into a little bit of vol. Go figure, listeners. The vol's up about 5.25 handles, so 31.5 or so in that AUG at the money implied, which is pretty juicy compared to what we just talked about. WTI vol coming in is at a 17. This is almost 2x WTI vol out here. So corn has been rocking and rolling of late. Let's look at the SKEW. Last week, the puts were where the action was, 5.7% rich. The at the money this week, similar level, about 5.4%. So puts coming in, but only slightly. Calls, 2.1% rich last week. This week, 4.7%. So I take that back. Calls also where the action. Bids to both sides. Nice little healthy smile going up out there in corn land this week. So some folks maybe not sure what the future holds for corn. Given the fact of what we've seen to the upside and the downside of the last couple of weeks, I can't really say that I blame them. Let's see what the hot strikes out here and the hot trades were. Actually, we have to go beyond this AUG contract. We have to go out to Dees. For the Dees, 330 puts, 330 even. That was the big print of the week. 21,519 of those going up pretty much all week long. Every day was about 5,000 or close to it. 7,000 on Wednesday. Total of about nearly 22,000 on the week. So a pretty active contract out here this week. Then we have to go back up to, actually, you know what? I missed this one here as well. It was out in SEP doing a little bit more. 22,342 of the SEP 320 puts. So near out of the money puts seem to be where the action is in corn. These did 22,300. The lion's share of that was on Wednesday, about half of that, 12,500 going up on Wednesday. The rest kind of scattered throughout the week. A lot of that closing, all of that on Wednesday was closing. So people, maybe some folks rolling out from these puts here out a little bit farther because it is similar levels of paper out to the 330 puts here in Dees. Either way, some closing paper here in the 320s. Let me go back to where the action was in our most active month, which was August. And we go to the 350 call. So the 3.5 calls leading the dance out there. 19,565 of those. The big day was Tuesday, 6,300, and then 6,200 on Wednesday. Up slightly biased towards opening. Seemed like a lot of pretty much back and forth. And that makes sense as we're threatening and moving away from that 3.5 strike over and over again. You're going to see some paper aggregating there. So a lot of back and forth, churn and burn on the 3.5 strike there in AUG this week. So corn, who knew it? Corn, where the action is, if you're wondering how much paper going up this week, 755,000 contracts. So corn A lot of paper out here this week. Mr. Rhodes, I will leave it up to you now, sir. Should we do one more product, or should we get the listeners in on the show? What do you think?
I just wanted to make one comment about corn, and this is, I'm not making this one up. I can tell what's happening in the corn market by how brown my grass is turning or how green my grass is. I kid you not. The most recent rally that we had really did accompany a week where we got no rain here in Chicago. And then, it started to come back in a little bit, and lo and behold, the most important man in the corn market, Tom Skilling.
There you go, listeners. So if you want a leading indicator for what's going on in corn volatility, driving out to the suburbs and check out Russell Rhoads' lawn. Meanwhile, it's time to check out what you guys have in store for us. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to your feedback, the portion of the show where you guys take the reins. First off, we have a follow-up from a question we discussed on the show last week. Comes from regular listener, Mr. Options Game. He chimed in last week with an interesting outlay here, interesting trade idea in the SEP 10-year. He said the 138.5 and 139 straddles had the same price. He wanted to know how that was possible, and he was thinking about arbing the two, so buying one straddle, selling the other. We kind of gave him a bit of a hard time on the show. You would expect that differential to be not that much because those strikes are very close together, and the 10-year, I think, has a 3 volatility, so you're not seeing a huge differential in those strikes out there. And also, it's a lot of commissions, so he really must like his broker. But it sounds like he did the trade. He says, "Thank you for answering my question." I said, his wife also gave him a hard time. He said, "My wife made fun of me. She said, another one of your risk-averse trades." It was a 2-tick winner pre-fees, though. Well, good for you. You made money on it. You had a good time. Sounds like your wife gave you a bit of a hard time. That's unusual. Usually the non-trading spouse is the one who's more risk-averse. So they're the ones maybe giving you a hard time for taking risk. Sounds like your wife is on the other edge of that. She wants you to dial up the risk. Mr. Rhoads, what are your thoughts on that as a trading strategy? Arbing half-handle straddles in the SEP 10-year, sir.
If it's giving you free money, take the free money.
Yeah, he made a couple of
I don't care how much it is. Just take the free money.
He has a seat, I believe, too, so that allows his commissions to be a little bit better than maybe your average Joe retail guy. Otherwise, his trade would be kind of hard to be sustainable. But it sounds like your wife wants you to dial. I'd be curious, what does your wife like to trade? Is she slinging straddle swaps back and forth on some hardcore vol products? Inquiring minds want to know here. Options Game. All right, next up we got Duncan. He's chiming in on a theme we had on the show last week as well. He says, "I like the idea of including crypto in the movers and shakers for the week." Well, I like it too there, Duncan. I forgot the name of the listeners who wrote in last week asking a similar thing. The problem is, by default, the scan doesn't include those. So we have to go back in and kind of manually add them to the scan. But you know what? We can, since you asked so nicely, we can do that for you. So we did that this week again. We reran our movers and shakers for the past week since our last show, including crypto in the analysis. And if you do that, unlike last week where crypto wasn't a big mover, this week it does actually pop in to the dark side. Now remember, the dark side is pretty anemic. There's only like 6 or 7 names in it this week. Everything else is red, or I should say everything else is green. But crypto does make it in there. Bitcoin, with that rerun scan, would be number 3 to the dark side, off 2.62%. So I guess ask and you shall receive. If you guys want us to include crypto in the movers and shakers going forward, we can certainly, I think, accommodate that request. Mr. Rhoads, what do you think? Should we start including crypto in our analysis going forward?
Absolutely, and it's a market that I pay a lot of attention to, personally and professionally. I'm actually a little surprised that with the bump that we've gotten out of the equity markets, it seemed like crypto followed the equity markets down in the spring, but has not rebounded with the equity markets, over the last month or two. Maybe there's a short stocks buy crypto trade in there I can come up with.
I like it. So that's a big area of research for you over at EQ is crypto, sir?
Yeah, absolutely. I will just leave it at that.
Well, there you go. Well, they only have the one product, the futures and the options that are starting to light it up more. So if you like that segment, and it sounds like, what was the listener's name? Duncan, you do, check out our Crypto Rundown show if you haven't done so already, listeners. It's a fun one, and we get into all this goodness in a lot more detail, not just the options and futures here, but the ones across all the various venues out there. A lot lighting it up in the crypto space these days. Next up, X Owls with a Z. X Owls. He wants to know, do you think you guys could get aired on Spotify? Well, I do think we can, and in fact, we are. So for everyone out there who wants to listen to us on Spotify, it's pretty easy. Just type in the name of the show, This Week in Futures Options, into the Spotify search bar. If that's too much for you, you can even just do it in Google. Type This Week in Futures Options and Spotify into the Google search bar, and I guarantee it will take you there, because I just did it before the show just to make sure everything was live, because I figured, why was he asking about it if it was live? But it is live, and it has been for some time, so you can get it there in Spotify. All of our shows are available pretty much anywhere you want them to be. So Spotify, Stitcher, Apple, of course, the Google Podcast, more of you liking it on YouTube, so we're making some playlists. I think there's a TWIFO playlist on YouTube now, so pretty much anywhere you want to get it, it is available there. If you just want to grab the RSS feed, you can do that. If you want to go to our website and stream it all, you can do that. Our app has everything baked into it, so if you're looking to really get access to the archives, sometimes the venues like iTunes and others will limit you to the most recent 50 or odd or so episodes, and a lot of our shows have been running for a long time, so if you want to sink your teeth into a lot of listening, and these days a lot of people do, then the app or our website might be the best places to go. But hey, it's available anywhere. We saw the other day in one of our other shows, huge community for our stuff in Podbean. I forgot that was even a venue out there. So all these little esoteric venues, people are popping up. Our stuff's available on all of them. If we don't upload it, they will usually scrape it and pull it in, because they like to pull the popular stuff into their platforms, so they have reason for people to go to their podcast store, right? So it's usually available in most of the leading stuff. If for some reason there's a venue you want, just ask us, like X Owls did, even though it was already available there. So yeah, check first. Check first to make sure if it's not available. Then if it isn't, let us know. But yeah, we're on Spotify, so you guys can go to town out there. Niels, or perhaps Neil S., he wants to know, have you guys thought about doing a volatility-oriented movers and shakers list? Yeah, we have. And there is some functionality to do that over there in some of these tools we have. The problem is, and Mr. Rhodes, I'm sure you have some thoughts on this as well, how do you do it? Because there's a lot of different ways. Like, for example, when we do a lot of our analysis, we tend to eschew some of the very near-data stuff going away in like a day or two, because you're going to see weird swings in vol as a result. You're going to see weird swings in SKEW, and they're not really representative maybe of what's going on in the actual underlying product itself. So to do an appropriate vol movers and shakers scan, you kind of have to filter out some of that noise. But if you do that, then you're filtering out a lot of where the action is, and let's say the equities and a lot of other products that live in that front portion of the curve. So it's a bit of a catch-22. We haven't really settled on the right methodology yet, which is why we don't do it. But it is something we're considering. Mr. Rhodes, you live in the vol space. What do you think is the best way to do some sort of vol movers and shakers scan here on the futures option space, sir?
It'd be darn near impossible to rank them, because I did something like this when I was over at Tab Group. And as you mentioned, we were talking about the 10-year and the straddle on the 10 years. Pulled up some old data, and the implied vol for 10-year options, and I used 30-day. I came up with kind of a 30-day back of the envelope calculation. For the 10-year, it would range between 3 and 6. For the Euro mid-curve, it would range between 25 and 125. And, each market, at crude oil, between 55 and 25. So ranking them would be kind of difficult. because they all have their own very, very unique ranges. If you've got if the gold implied vol moves from 10 to 15, that's a 50% move. You would, for the same thing in crude oil, you'd need it to go from 30 to 45, which is a much bigger move. So ranking them out like that would be, I don't know, pretty difficult. You could maybe qualitatively pick one out that maybe had a big move each week and discuss that one. But unfortunately, ranking them the way that I think you do some other markets or some other metrics, it's just very difficult, again, because each market has its own unique implied volatility behavior.
Yeah, that's why we've kind of persisted with our general underlying movers and shakers, because A, it's simple, B, it's straightforward, everyone listening can understand it, C, it's not subjective at all, it's straightforward, how much it moved, that's it. You get into the vol side, you get very subjective, where we have to remove this, we have to add this, it becomes much more of a subjective list. I like it to be an objective ranking, and that's difficult to do in the vol space. Similar question here from Blankenship. Blankenship says, I think you guys should issue a SKEW report where you break down the best SKEW setups. He puts in parentheses for risk reversals and collars, etc., and also the biggest SKEW movers. I would be interested in that. Yeah, that falls into a similar territory here, Blankenship, to what we were just talking about here with Niels. These questions should have come in together because it's the same thing. It gets subjective now because a lot of these big SKEW moves that you're seeing are going to be in a contract that has half a day to go. And absurd things like that aren't really meaningful. So you have to filter out a lot of noise to get to the signal. And then what do you filter out? Is this a real move? How do you filter that out in places like equities where everybody plays in very near-dated contracts? So there's a lot of filtering you'd have to do on that to make that SKEW. But that said, there are moments. Most recently, what comes to mind is actually in the early days of this program and when we were talking about soybeans and how they were very, very attractively set up for collars at the time. Obviously, the calls were getting a lot of juice. You could sell that covered call. You could buy the future. And you could buy the put for a fairly cheap amount. So that all led up to a really nice, tight collars you could put on for pretty impressive levels out there. So when we do see those setups and individual products pop up, we will try to highlight them for you. But again, same challenge as we had with the vol. It's almost entirely subjective. Mr. Rose, you concur, sir, that doing a SKEW, I guess, what's he call it, best SKEW setups report would be almost equally difficult and or subjective to the vol report, sir?
Ranking them out would be very difficult. Pointing them out, which I think you're already doing a really good job of on this show, is just something that, you're already kind of doing. It's, again, the different nature of implied volatility across all markets, the different way that the SKEWs behave. We've touched on that. We touched on energy today. We talked about we talked about gold, which does behave a lot like oil as well sometimes, versus you really would have a very difficult time reading anything into the different equity products that are, with the Russell 2000, for example, you'd have kind of a tough time ever really reading anything into it because it's pretty consistent. I mean, it gets steeper and a little less steep on the put side, but it's not telling you a whole lot there. So again, ranking is hard.
It is hard indeed. That music, unfortunately, means we've come to the end of this program. Indeed, the end of our broadcast week here. Let's end it on a high note. Let's end it with some love. This one comes in from M Tech as we head on into the holiday weekend here. He says, in the spirit of The Last Dance, Longo is definitely the Michael Jordan of options podcasting. Long may he stay on the air. Thanks for so many great shows. Well, thank you for writing in, M Tech, you and all the rest who've chimed in with such great, nice thoughts about how much the content has meant to you over this last period out there. We're endeavoring to keep as much content flowing to you as humanly possible, hence the multiple shows you guys are getting a day. We'll make sure you guys get something as well tomorrow. I'm not sure what it'll be, but we'll make sure it's something fun. And I appreciate the comparison. Michael Jordan of podcast, I could maybe go for that. I'm certainly, if Michael Jordan was the progenitor of basketball, I certainly would fall into that category. But we did kick off this whole kit and caboodle in the options podcasting realm. So I'll take that hat. Michael Jordan, maybe. I don't know. I kind of like that. I like the ring class. Maybe I'll go for that. So thank you for that, M-Tech. We appreciate all of you out there who are listening and enjoying and getting a lot of value out of the content. Unfortunately, that music means we've come to the end But before we go, let's go back around the horn. Let's check in with Mr. Rhodes. Mr. Rhodes, you're cranking away at all sorts of crazy different stuff out there. What can you leave our listeners with in terms of hints and teases? And if they want to learn more, where should they go?
Nothing that I'm really working on in the next couple of weeks. Just, July is a slow time of the year for the markets. When I do put new things out there, it's all at EQDerivatives.com. A lot of what I've done has been behind a paywall, but I've talked the fellas into letting me open a few more things up. So I will tweet out when articles are available to everybody.
There you go. Give him a follow on the old Twitters in between so you can keep track of all that stuff at Russell Rhoads. 2 S's, 2 L's, and a funky spelling of a Rhodes. Make sure you spell it correctly. Then you'll find all his tweets in between shows out there. And, of course, check out our friends over there at FTSE Russell Land. If you want data on the recon, what the heck happened, what did it mean, what should it mean for your portfolio, FTSERussell.com is the place to go, FTSERussell.com. Give him a follow on the old Twitters as well, at FTSE Russell. Sean should be back next week to parse all that in a lot more detail. And, of course, check out our friends over there, CME Land. If you want to play the home game, CMEgroup.com/TWIFO. All the reports. You can get all that stuff I talked about pretty much completely for free. If you're not doing it, you're insane. Take advantage of it while they make it available to you. CMEgroup.com/TWIFO. If for some reason that URL doesn't work, just use TWIO, TWIO. Either way, one of those will work. And you'll be able to get all those cool reports in between episodes of the show so you can see for yourself exactly how much the SKEW changed in lean hogs last week. It's up to you. And if you have a question, a product you'd like us to talk about on the show, maybe it doesn't make it into the top 5 all the time, it might have some fun options flow to parse, let us know. We love to hear from you. And on behalf of our friends over there in CME Land and FTSE Russell Land, and of course Mr. Rhodes, and indeed myself, I thank all of you out there for joining us, not just for TWIFO, but all week long. You guys have been chiming in like crazy, listening like crazy. Glad to see you're sinking your teeth into all our content. If you want some more live fun, maybe we'll put some fun stuff into this live stream. So stay in there if you're listening, listeners. And we'll have to rejigger a little bit, but maybe we'll come back with some fun extra credit live streams. Maybe we'll do some more of that tomorrow, too, so you have some fun live stuff to enjoy. Or at the very least, some replays of live broadcasts. You can keep yourself active if you want to get away from your family for a little bit. We'll try to help you. And we'll see you back here again on Monday for more Higher Network on Monday, and then back again on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.